Well, you're right. There's no question that China is the central engine of the electric vehicle revolution globally. And I mean, last year, China accounted for 60% of all electric vehicles built and sold around the world. And if we step back for a second, in 2020, it was 1 million. Last year, 3 million. And this year, we're on track for 6 million production out of China, including Tesla there. So
the Chinese have no choice but to meet price cuts with their own, putting further pressure on their bottom line. BYD margins are now razor thin. NIO, Li Auto, and XPeng are bleeding out, holding on. This is according to Michael Dunn, CEO of auto consulting firm ZOZOGO. Dunn also said that Tesla seems convinced that the best way to win out today's China market of weaker demand is with aggressive price cuts sustained over time. As a result, it could put immense pressure on its competitors there. For context, Tesla cut prices for its existing inventories of its premium Model S and Model X cars in China by as much as 6.9% a few days ago. A post from the car maker on the social media platform Weibo showed the price of the Model S cut by 6.7% to 754,900 yuan, $103,477.58 from 808,900 yuan. Likewise, the Model X now starts from 836,900 yuan, down 6.9% from 898,900 yuan. It is worth noting that Tesla has rolled out cheaper versions of its Model S and Model X vehicles in the US, although they are not new issues, but are range limited by software. Tesla continues to focus on gaining market share and boosting car sales at the expense of margins. In its June quarter earnings, the company reported operating margins of 9.6%. It is so far the lowest for at least the last 5 quarters. The continuing discounts concern investors who worry margins may erode too much. Following the price cuts announcements, Tesla shares were down nearly 3%. Still, Tesla's discounts have caused fears of a price war in the Chinese market, which could impact smaller players. Shares of Chinese electric vehicle upstarts XPeng, NIO, and Li Auto were all lower in the morning trading in the US. The lower price comes as the Chinese economy struggles to regain a stable footing after exiting a period of strict COVID-19 restrictions, with consumers still cautious about spending. The CEO of auto consulting firm ZOZOGO, Michael Dunn, said that Tesla seems to be convinced that the best way to win out today's China market of weaker demand is with aggressive price cuts sustained over time. This could put immense pressure on its competitors there, he added. The Chinese have no choice but to meet price cuts with their own, putting further pressure on their bottom line. BYD margins are now razor thin. NIO, Li Auto, and XPeng are bleeding out, holding on. Tesla notably sold 64,285 China-made electric vehicles in July, down 31% from a month earlier, according to the China Passenger Car Association. Before Model S and Model X price cuts were revealed, actually just a few days prior, Tesla had cut prices for the Model 3 and Model Y in China. Experts view this move as one that could trigger a new wave of discounts for EVs across the country. Tesla took to Weibo to reveal that prices of both the Model Y Long Range and Model Y Performance have been cut by 14,000 yuan, $1,934. The cuts mean that the price of a Model Y Long Range has dropped by 4.5% to 299,900 yuan, $41,100, while the Model Y Performance is now available from 349,900 yuan, $47,952, representing a 3.8% cut. The Model 3 sedan hasn't been neglected either. Local customers looking to pick up the keys or key card for the entry-level rear-wheel drive Model 3 can receive an 8,000 yuan, $1,098 insurance subsidy. To be eligible, the car purchased must already be in Tesla's inventory, and the offer is only valid until September 30th. Elon Musk has previously said that the car maker would consider further price cuts, despite the threat of them squeezing its margins. Evercore ISI analyst Chris McNally told Auto News there's a potential that these cuts in China may also trigger similar cuts in the United States and Europe. Basically, Tesla has decided to tweak its Model 3 Model Y offer in China to potentially boost sales results and secure a strong third-quarter volume. For context, Tesla's Q2 earnings report revealed that it generated $24.93 billion in revenue in the second quarter of the year. Musk hopes that the company will deliver 1.8 million vehicles this year, but noted that production in Q3 will be down slightly due to planned summer shutdowns as it upgrades its factories. Tesla produced 479,700 vehicles in Q2 and delivered 466,140 vehicles. These vehicles were slightly higher than many analysts had expected and were driven in part by incentives and discounts. The recent price cuts are Tesla's way of achieving its Q3 targets, so it reduced the prices of the Model Y long-range AWD and performance versions by about $1,929, 14,000 Chinese yuan, which respectively means a 4.5% and 3.8% cut. Prices of the entry-level Model Y RWD and both Model 3 versions, RWD and Performance, remain unchanged for quite a while now. The basic specs are also the same as in early 2023. Even though the Model 3 prices remain the same, it does not mean that there is no good news for customers. That's because Tesla announced a time-limited insurance subsidy for the Model 3 RWD from the existing inventory. Basically, cars that were already produced but not yet ordered by anyone. A big note on the top of the ordering page says that ordering an existing Model 3 rear-wheel drive version will result in an insurance subsidy of 8,000 yuan or around $1,102. Expected delivery times for new Tesla Model 3 and Model Y cars in China are very short, 1 to 4 weeks for the Model 3 and 2 to 6 weeks for the Model Y. It's tricky to say for sure, but there's always a chance that the manufacturer intends to clear its inventory before introducing the upcoming upgraded Model 3, known to many as Highland, which according to speculation and rumors should be on the market soon. In terms of sales, according to the China Passenger Car Association, CPCA, the overall wholesale vehicle shipments of made-in-China Tesla Model 3, Model Y cars in July amounted to 64,285. That's 128% more than a year ago, but also the lowest monthly sales results so far this year. Local retail sales amounted to 31,423, which is up by 271%. Up from a very low base a year ago, while exports amounted to 32,862, significantly up by 66%. The Model Y was responsible for more than 2/3 of all MIC sales. While others say that Tesla's price cuts in China will yield great results, investors aren't so sure. It is no secret that the competition in the EV space is getting more heated by the day. In light of this, in early July, 16 automakers including China's BYD, Tesla of the US, and Chinese state-owned companies that have formed joint ventures locally with major Japanese, US, and European automakers agreed to avoid creating excessive competition in the Chinese market, including abnormal pricing. The rivals came to a compromise suggested by the Chinese government, as Asia's largest economy faces a slowdown, which has led automakers into an intensified price competition in new car sales, including electric vehicles. At an international conference held in Shanghai, said companies signed a letter of acceptance for maintaining fair market order in the automobile industry. A senior official of the Ministry of Industry and Information Technology, who is in charge of automobile policy, witnessed the agreement. The letter consists of 4 pledges: 1. Not to disrupt the fair competitive order in the market with abnormal prices; 2. Not to mislead consumers with exaggerated advertising; 3. To provide high-quality products and services; and 4. To actively fulfill their social responsibilities. Notably, the 16 companies make up the majority of new car sales in the country's domestic market. They include big state-owned groups such as SAIC Motor and China FAW Group, which have joint ventures with Japan's Toyota and Volkswagen of Germany, Zhejiang Geely Holding Group, a privately owned automaker that owns Volvo Car, local EV makers BYD and Li Auto, and Tesla. According to Chinese media, an official in charge of the auto industry at the MIIT said, "The development of China's auto industry is facing challenges, and it is necessary to regulate sales promotion activities, including avoiding reckless price cutting." The official also said automobile companies should contribute to maintaining a favorable market environment. Price competition has also been intensifying for new energy vehicles such as EVs, the popularity of which is growing rapidly in the Chinese market. That said, it is because of this agreement that Tesla's recent price cuts in China were seen by many as a controversial move. Subscribe for more.